Hey, thanks for watching today. I'm David Pastana, broker and owner of Utah Realty, and I wanted to share with you a Utah housing market update. You can almost extrapolate a lot of this market update into the general housing area for the whole United States because they're experiencing many of the same trends. So this is an in-depth market update, and let's dive in. What you see right here is basically a market overview. There's a lot of data here, but let's break into it. Let's start with listings. Right here, you'll see that the number of listings, these are the new homes that you have available to buy. And the people who are listing it is down actually 13.6%. Pending sales are those who are under contract, and that's a big one, 41.5% down. So that means that of the houses that are being listed, fewer of them are actually getting an offer. And what that means is time on market's going to go up, and as it goes up, prices generally drop on listings. So going down here, we see that closed sales, the number of sales that actually end in a closing, are down 25%. So again, this number from here to here represents a huge decline in the number of homes selling. And part of that we'll get into, which involves interest rates. So as homes fail to sell, the days on market go up. So we go from 21 days to 40. And that's almost 100% increase here. It's actually 90. So what you would expect is prices to go down, and they actually have started to go down. If you see right here to here, there is a decline, but overall, for the last 12 months, we've had a positive, but in the recent months, we've actually started to decline in value. So what we're gonna do is we're gonna skip on and get more into the details of this. Now, you see at the bottom of here, these line points, these are basically years. And you'll see that Utah has a cyclical market because in the holiday, cold winter months, less people are likely to move. Summer months, when families don't have school, they tend to move. But what's not good is that we have a decline of listings, not just this year, but a little bit lower each and every year. Technically, as new homes are built, we should have more homes on the market year after year, but we're not. And so that goes to kind of an inventory problem, which we've been having for years. And the less homes that are for sale, that typically pushes prices up. But we have other factors right now that are pushing prices down because with higher interest rates, home affordability is really dropped down. We're seeing home affordability at an all-time low. I'll get into that in a second. Pending sales are homes again under contract, which I had mentioned. Right here again, we see this. We see the cyclical nature of the market. But what's happening is much more dramatic than just a typical cyclical nature. Again, as homes started to get really expensive, we saw the number of pending sales go down. Pending is under contract. But this is way more. Again, it's dropped because interest rates are so high that effectively the homes, many people are getting priced out of the home, which has pushed the number of people who can actually buy it down considerably. And so here we are today in this low category. Now, moving on, closed sales, again, right here in the very end is where we're at. And that would show that, again, a dramatic decrease of 25%, which I mentioned in the very beginning. I think, well, let me answer this, is that, mortgage companies had many refinances in the last few years for the low mortgages. And I read a stat that mortgage companies' applications are down 90%. Because, if everybody has like under a 4% rate, no one's going to want to refinance now because rates, as of this week, were at 7.3%. And that's assuming good credit, 20% down. You go much higher than that or not have the perfect credit, you're going to be up in the 8s pretty soon. So again, that's all affecting these sales numbers. So again, as you have less sales, as you have fewer going under contract, your days on market starts to increase. But I do want to note this graph here. So this is like the financial crash of 2000, or sorry, this is before the financial crash right here, 2007. And then the housing market went down. This was kind of the year the housing market crashed. Days on market was starting to go up, but really, as the market recovered, starting in 2012, days on market on average went down. And, they were generally above 40 days. So this line's 40, this line's 60. And it was really during the COVID years when there was a lot of stimulus, low interest rates, we saw that number just plummet. and the average days on market was very low. In fact, it was under 1 month. It got as low as I think 18 days. And now what we're seeing is it start to come back up. So right now we went 2021 with 37 down to 21 and back up to 40. And we can expect that this number will probably increase. Probably the scary part of that is that it's increasing in a time where it typically stays low, because really through the summer and September, we have low days on market. And then starting in October, November, December, we generally will see that number go up into January, then it drops back down again. So the slowest month of the year is December. The fastest month of the year for sales is May, June. So median sale price is affected by all of this. And again, this is a long period. This is the financial crash. This is the trough where we got out. And then here we go up, and we've just been going up ever since. So that's many years of a really incredible incline in real estate prices. In the last 2 years here, we saw the most dramatic trend increase, and then recently we're going down. So what you've seen is, again, 2020, 13.7, 2024, 24.8% increases. These are huge. And this year so far, again, 6.5, but that's not telling the whole story, because if you go from here to here, that's a year. So, but in recently we're seeing the decline. So if we keep this up, 6 months from now, we'll have a 12-month period where it is negative. Oh, okay. So I think that was my last slide. I hope if you have any questions that you'll just comment and I'll answer them below. But please, if you've watched this much, please follow and like me, like this video, so that you can get more content from me. And I'll always keep you updated for the real estate news and what's going on. Thanks. We'll see you.